Welcome to the Deep Dive. Today, we're digging into Bitcoin's recent massive surge. It hit a new record high. You shared a piece discussing this, and the timing is actually pretty remarkable.
It really is, yeah. May 22nd, 2025. Bitcoin didn't just edge up, it smashed past $111,000. That's a very significant milestone.
And the kicker, it landed exactly on Bitcoin Pizza Day. Remember that
Oh
story?
yeah, the first time anyone actually used Bitcoin for something real world, 2 pizzas.
Exactly. Quite the symbol for hitting a new peak price like this. So our mission today is to unpack what really drove this surge and, what it might mean going forward.
Sounds good.
Okay, so let's get into the main drivers. What kicked this off?
Well, there's definitely some general market enthusiasm,
Yeah.
that sort of momentum that builds.
Right.
But maybe more importantly, a key factor is the continued growth in institutional adoption. That seems really significant.
So not just us regular folks anymore. The piece mentioned those Bitcoin spot ETFs, seeing really strong, consistent inflows. That's the serious money, right?
That's exactly it. You've got firms like BlackRock and Fidelity. Their ETFs are holding tens of billions in actual BTC now.
Wow, tens of billions.
Yeah, and that level of institutional cash, it adds huge demand. Plus, you could argue it gives Bitcoin a bit more legitimacy as a real asset class.
That's interesting. Does their buying change things? Like maybe they hold longer term than smaller traders? Could that mean less crazy volatility maybe?
That's a great question, actually. If these big players are in it for the long haul, it could potentially stabilize the price swings we've seen historically. It's something to watch.
Okay, interesting. So institutions are a big piece. What else fed into this rally?
We should also look at the wider economic picture. The article noted that easing tensions between the U.S. and China helped.
Okay. How so?
Well, a more stable geopolitical scene generally makes investors feel a bit more comfortable taking on risk. And assets like Bitcoin are often seen as, higher risk.
Got it. Less global stress, maybe more confidence to invest in things like crypto. And what about regulation? There was something in the U.S.
Yes, definitely. Progress on crypto laws in the U.S. is a factor people are watching closely. The piece specifically mentioned the Genius Act. It's bipartisan.
Genius Act, okay. What's the goal there?
The aim is to bring more clarity. Things like defining which assets count as securities, rules for custody, basically trying to create clearer guidelines for the industry.
Which sounds good on the surface.
Yeah.
Less uncertainty.
Right. Clear rules can encourage innovation, give companies a framework, but, there's always that question. Could some regulations, even well-intentioned ones, end up accidentally slowing down development in certain areas?
Yeah, that's the constant balancing act, isn't it? Regulation versus innovation.
Yeah.
Okay, so what's the general feeling out there among investors? How are people reading this big price jump?
The piece suggested there's this growing optimism. A lot of people are seeing this Bitcoin surge and thinking, okay, maybe this is the start of an altcoin season.
Right. When Bitcoin does well, sometimes the other coins follow.
Historically, yeah. Strong Bitcoin performance often leads to more interest, more money flowing into other cryptocurrencies. It's like a ripple effect.
Interesting. And are analysts seeing real strength behind this move, not just hype?
Seems so. They point to a couple of things. One, the amount of Bitcoin actually available on exchanges is relatively low.
Meaning people are holding, not selling.
Exactly. And two, you have that record buying we mentioned from the spot ETFs. Taken together, it suggests strong conviction, especially from those institutional players. They're accumulating.
Okay, so tying this all together for you listening, why does Bitcoin hitting this new record matter? What's the takeaway?
Well, if you look at the big picture, this surge really gives you a snapshot of how market dynamics are changing. Digital assets are becoming more integrated into, mainstream finance.
Right.
Understanding these drivers, the institutional money, the macro trends, the regulatory moves, it helps you see potential future trends, not just in crypto, but maybe in broader markets too. It shows how tech, economics, and policy are all sort of interacting.
Yeah, it's about seeing those connections and what they might signal about where things are headed. Okay, so quick recap. We've got market momentum, huge institutional adoption via ETFs, a calmer global economic backdrop, and progress on U.S. regulation all playing a part.
Exactly. It's really a combination of these things creating this supportive environment.
And here's a final thought. Bitcoin hitting this massive price on the exact anniversary of those first 2 pizzas being bought with it.
Yeah, it's kind of wild.
It really makes you think, doesn't it? About the incredible journey, how radically our valuation of digital assets might keep changing over the next, say, 10 years. From basically nothing to this huge asset class, what other transformations are coming? Something to think about. Thanks for taking this deep dive with us.